Now I want you to consider a number, $900,000. That's the price gap between owning a single family home and a condo. The big question is why? And more importantly, what does that gap mean for your money and for your next move? If you want the real data-backed answer, not the headlines, but the strategic intelligence that will give you an edge, you're in the right place. And before we dive in, do me a quick favor and hit that like button and subscribe. You won't want to miss the insights that we uncover each and every single month. Imagine this for a moment. It's a Sunday afternoon in South Torrance, the 90505 zip code. You're driving down a quiet tree-lined street in the Walteria area. You see classic single-story homes with manicured lawns, kids riding bikes on the sidewalk. There's a sense of permanence here, a feeling of established community. For decades, this has been the picture of the California dream. And for anyone trying to buy one of these homes today, it feels like a dream that's moving at 100 miles an hour. Properties here get listed and are gone in a flash, often with multiple offers pushing the price over asking. It's a market defined by scarcity, speed, and intense competition. But then you turn the corner, and just a few blocks away, you see a collection of well-maintained townhomes. The vibe is different. It's still beautiful, still desirable, but the energy has shifted. Here, a for sale sign might linger for a few weeks. Buyers have time to breathe, to think, to negotiate. It's a market defined by opportunity, balance, and choice. This isn't a fantasy, it's the reality of the Torrance market right now. And that startling nearly $900,000 price chasm I mentioned, it's born right here, in this divergence. You see, the most common myth in real estate is that a city is one single market, that a rising tide lifts all boats equally. But the data tells a profoundly different story. Right now, Torrance isn't one market. It's two distinct, separate ecosystems operating under the same city name. And the experience you have as a buyer or a seller depends entirely on which ecosystem you're in. The key to understanding this split is a concept we call months of supply, or the absorption rate. It's a simple but powerful metric. It tells us that if no new homes come on the market, how long it would take to sell every single available property at the current pace of sales. Think of it as the market's metabolism. A market with less than 3 months of supply is considered a strong seller's market. Demand is burning through inventory faster than they can be replaced. Across the entire city of Torrance, the market for single-family homes is operating with just 1.67 months of supply. That's an incredibly fast metabolism. It means for every new home that comes available, there's a line of hungry buyers ready to compete for it. But for condos and townhomes, the citywide figure is 3.08 months of supply. That's nearly double. This number trends much closer to what we consider a balanced market, where the relationship between buyers and sellers is more equitable. There's less upward pressure on prices from the frantic competition and more room for thoughtful strategic negotiation. So you have two parallel markets, one defined by scarcity, the other by relative balance. Now here's the twist. The citywide median sales price for a single-family home hit $1,263,000 in September. That's a strong 3.44% jump from the previous month. But look at condos and townhomes. Their median price was $800,000, which was an even stronger 8.84% jump in the same period. At first, that seems backwards, right? Why would the segment with more inventory see faster price growth? The answer is the single most dominant force shaping the market today: affordability. The relentless climb in single-family home prices is hitting a ceiling for a growing number of buyers. According to the California Association of Realtors, housing affordability in our state is hovering near a historic low. To buy a median-priced home, you need a minimum income of over $232,000 a year. Faced with that reality, many would-be single-family homes aren't choosing to look at condos. They are being pushed into that market as their only viable path to owning a piece of Torrance. It's this spillover of demand from the superheated single-family segment that's fueling the rapid price growth in condos, even with a healthier supply of homes to choose from. Let's dig deeper into that single-family home market, because if you're looking to buy here, you need to be prepared for a full contact sport. The intensity is right there in the numbers. In September, homes that sold went for an average of 99.9% of their final list price. That means sellers are getting their asking price with virtually zero negotiation. The median days on market was a blistering 17 days. Half of all homes sold went into contract in just over 2 weeks. This pace leaves little room for hesitation. It demands decisive action from buyers who are fully prepared to compete. And the inventory isn't getting any better. Last month, 71 new single-family homes came on the market and 66 sales closed. It's a near perfect equilibrium. For every home that was listed, another one sold, keeping the number of options for buyers chronically, painfully low. This pressure isn't the same everywhere, of course. In South Torrance and Walteria, the 90505 zip code, you're at the absolute peak of pricing competition. The median sold price there was over $1.4 million, and the sales to list price ratio was over 100%, meaning bidding wars are not the exception, they are the rule. Central Torrance, the 90503 zip code, is right behind it with a critical low 1.21 months of supply and a median price of $1.3 million. If you're thinking about buying a single family home in this market, preparation is everything. Drop a comment below with your biggest question about getting ready and I'll answer every single one. Now let's pivot to the condo and townhome market. This is where the story changes completely. This is where buyers find the invaluable commodities of time and choice. A median of 18 days on market might not sound like a long time, but compared to the sprints for single-family homes, it's a marathon. It allows for more thorough inspections, more thoughtful consideration, and more strategic decision-making. The citywide sales to list price ratio of 98.7% confirms this. It shows a robust market, but one where there is room to negotiate. And this is where that microcosm of the entire Torrance market, the 90505 zip code, becomes so telling. While the single family market there is the city's hottest, its condo and townhome market is the city's most balanced. With 4.17 months of supply, it's a world away from the 1.52 months for houses in the same neighborhood. The median sold price for a condo there was $545,000. That's where you'll find that nearly $900,000 price gap. It's not a statistical fluke, it's clear evidence of a fractured market where the buyer pools for houses and condos are almost entirely separate. The single-family home buyer in South Torrance is competing in a luxury tier, while the condo buyer is operating in a more traditional price-sensitive market. This is what we call a barbell effect, and it means that citywide averages can be dangerously misleading. Your strategy must be based on your specific property type and your specific neighborhood. Beyond the immediate sales data, the future of your investment is being shaped right now by bulldozers and city planners. A quick survey of the major development projects in Torrance reveal a clear, undeniable trend. The future is multifamily. From the 218 units replacing the old gable house bowling alley to the 200-unit complex on Carson Street. The new inventory being built is overwhelmingly apartments and townhomes. This is a necessary step to address the housing shortage, but it reinforces a critical long-term reality. With no large tracts of vacant land left, the supply of classic Torrance single-family homes is effectively capped. As the city grows and densifies, these homes will become an increasingly scarce and therefore an increasingly premium asset. This structural scarcity will almost certainly ensure that single-family homes appreciate at a faster rate than their attached counterparts over the long term, widening that value gap even further. Understanding these long-term city plans is key to making a smart investment. If you'd like a deeper dive on how local zoning and state mandates could affect your property's value, my contact info is in the description. Let's set up a no pressure chat. Of course, Torrance doesn't exist in a bubble, and when you zoom out, you see just how strong the local market is. Los Angeles County as a whole has a much more balanced 4-month supply of inventory. Torrance's median single-family price of over $1.26 million places it in a significantly more affluent tier than the county-wide median of $850,000. Looking ahead, the California Association of Realtors forecasts that statewide home prices will continue to climb by another 4.6% in 2025. But the most impactful part of their forecast is about mortgage rates. They anticipate the average 30-year fixed rate will fall to 5.9% next year. Now, this is where we have to bust another pervasive myth: the idea that lower rates will magically make housing more affordable. The truth is, lower rates are a double-edged sword. Yes, a drop to 5.9% from today's 6.34% provides immediate relief on monthly payments, but it will also unleash a torrent of pent-up demand from the thousands of buyers who have been sitting on the sidelines. At the same time, it will loosen the lock-in effect for sellers who have been hesitant to give up their sub 4% mortgages. The results will be a simultaneous surge in both supply and demand. But given the sheer scale of the affordability crisis, it's almost certain that the wave of new buyers will overwhelm the wave of new listings. This will reignite the intense competition and accelerated price growth we've seen in past cycles. The market in 2025 will be more active, but it will not be easier for buyers. The relief from lower rates could be very short-lived as prices rapidly adjust upward to meet a new supercharged level of demand. This forecast is heavily influenced by the Federal Reserve. The Fed did cut its benchmark interest rate for the first time this year at its September meeting, and their own projections signal that more cuts are coming in 2025. But, and this is a critical distinction, the Fed's rate is an overnight rate. Mortgage rates are based on long-term bonds, and the bond market seems to believe that long-term inflation and economic uncertainty will remain elevated, which will likely keep mortgage rates from falling as drastically as the Fed's rate. The era of ultra cheap money is over. The Fed is making these moves because the national jobs picture is starting to show signs of a real slowdown. The September jobs report showed a surprising net loss of 32,000 private sector jobs. This validates the Fed's decision to cut rates, but it also adds a new layer of uncertainty. A weaker job market could dampen buyer confidence, acting as a counterbalance to the positive impact of lower rates. So what does all of this mean for you? How do you navigate this complex, bifurcated, and evolving market? A one-size-fits-all strategy is guaranteed to fail. If you are a prospective buyer, you must adopt a two-track strategy. If you are financially positioned to compete for a single-family home, you must be prepared for a sprint. That means having your financing fully underwritten and being ready to act with conviction. Alternatively, you can pursue a more strategic marathon by targeting the condo and townhome market. This is where you will find greater value, more options, and meaningful negotiation leverage. The current window of opportunity in that segment may be closing. If the rates forecasts are accurate, the 2025 market will significantly be more competitive. Acting sooner rather than later could be a powerful strategic advantage. For current homeowners, if you own a single-family home, you are holding an increasingly scarce and valuable asset. If you need to sell, pricing your home correctly from day one is the key to success in a market where buyers are more discerning. If a sale is purely opportunistic, you must calculate the real financial impact of trading a low-rate mortgage for a new one. For many, exploring alternatives like a home equity line of credit to access your equity without selling may be the smarter financial move. Synthesizing all of this, my forecast for the Torrance market over the next 6 to 12 months is one of continued bifurcation and increasing activity. The single-family market will remain a competitive area, with prices seeing modest but steady gains driven by structural undersupply. The condo and townhome market is poised for a significant increase in activity and price growth as it absorbs demand from priced out buyers, especially if mortgage rates fall. The national headlines will give you the broad strokes, but your success is written in the local data. Your strategy can't be based on what's happening in the country, it has to be based on what's happening on the street you want to live on. In a market this complex where local realities diverge so sharply from the national narrative, expert guidance is more valuable than ever. If you're ready to move beyond the noise and build a real estate strategy that works for you, your family, and your financial goals, all of my contact information is in the description below. Please reach out. Let's have a conversation. Thank you for watching. If you found this analysis valuable, please hit that like button, subscribe for more data-driven insights, and share this video with someone who needs to see it. I'll see you in the next video.